Well, Future Generation is celebrating its 10th anniversary this month. That's 10 years of investing and $44 million donated to Australian charities and philanthropic institutions over the past decade. Future Gen runs 2 LICs, both of which donate 1% of assets to youth-focused charities, and all of this is made possible by some of the country's top fund managers donating their time and their skills to the greater good. And that includes Jun Bei Liu from Tribeca Investment Partners, who joins me now. Jun Bei, good morning.
Good morning. How are you?
I'm very well, thank you. I'm just going to cut to the chase. Why do you work pro bono on behalf of Future Gen?
Look, I just think it's an incredible experience for the fund manager ourselves on multiple fold. First of all, we're generally very busy. We never had the chance to really give back to the community that supported us. And Future Gen gives us the ability to help a suite of charity that they have handpicked. And this is not just one; it's a whole suite of them. And for young people, I've got 2 kids myself, so it really comes very close to my heart. And what's also amazing is that Future Gen actually come and showcasing and tell us what some of those charities do every year. And our staff within our business all hear about those stories and, knowing that we have helped to contribute, some of the things that they're giving back to their members. I just thought it's an incredible experience.
Yeah, I think that's a good point, that it has value to your business as well, not monetary value, obviously.
Absolutely. A lot of our business, our staff actually felt like, even myself, at some point I do want to volunteer, is that not just that knowing that we help financially, it's that a lot of them actually want to volunteer and to be part of those charity. I myself, at some point, I do want to be a mentor with Raise Foundation, which I'm very closely associated with, and they're also one of the Future Gen charities. So, just incredible experience across everywhere, and I think really, really positive for the culture as well of the business.
Okay, so let's just take a step back. So, what's your investment strategy? I mean, we're fortunate enough to speak to you quite a bit, but for those who aren't familiar, what's your investment strategy, and does that apply to what you do for Future Gen?
Yeah, absolutely. So my investment strategy is that it's a long short fund that invests in the Australian market. So very much we're just a fund manager in the Australian market, but the ability to short, make us more agile. So when we see an opportunity, we can jump at it and then we can short to manage the risk. So it actually is a lower risk way to play and invest in the Australian market. So it absolutely worked for the future generations. In fact, we're one of their top performing manager for many, many years. Actually, ever since they started, we've been part of it, which I feel very, very honored to be.
Okay, great. Maybe then, while we have you here, Jun Bei, you'll allow me to just pick your brain a little bit about what's going on in the Australian market. I love to talk about it.
It's not allowed to.
I know. So remainder of 2024, we've got a big week to get through this week. If we do see some volatility, do you reckon we will, and this might be the first time I'm mentioning it on air, get a Santa Claus rally?
Oh, absolutely. I think this market is by the dip. And, of course, we've got the election and the like. There's a bit of volatility, not so sure, and all of that. You should be buying this market. Rate cut cycle's already started. Australia's not too far away, and economic condition is not too bad, and with China now stimulating, all very, very good condition for the share market to move higher.
Okay, so we're positive going into the year end and into FY25, or I should say calendar 25. We've had some big stories just in the past couple of weeks, one of which is mineral resources. So we've got the founder and managing director who will be stepping down away from the business because of these, you could call it scandalous. The board has financially penalized him. But he was always the driving force of mineral resources, correct? What happens now?
I think that's the challenging, isn't it? Like for many founder-led businesses, founder has their flair. They make what that business is special. And I think for many years, mineral resources being a very high performer, unfortunately for what's happening now, but being a very high performer, high returning business for investors. Now, if he's now going to step down in 18 months or so, and then the chairman will also step down before the next meeting, they will find someone which hopefully a safe pair of hands, but it does make this company just become another resource company. It will lose its founder-led flair. So for me, it's unfortunately this business will be changed forever, of course we need to see who will come in, but I do think it will probably lose a lot of its luster.
Yeah, that founder flair. Something that investors love to have, founder-led businesses, but then, it has gone awry, notably a couple of times here in Australia lately. Macquarie was out on Friday. Look, are you a fan of Macquarie right now? Well, I do note that Citi has downgraded it today. Price target of $177. I mean, that would be a buy, wouldn't it?
Yeah, that's right. So I'm really surprised at the downgrade, to be honest. I was looking at the downgrade. So I do think that Macquarie at the moment, it's backward looking, in terms of the earnings, it's a little bit weak. Moving forward, it is the best leverage to a, improving market condition, with the M&A and the deals improving with the, depends on whether Trump comes in or not. But if it is him, they will have a high oil volatility and the like. So Macquarie is very leveraged to what is going to come in the next 12 months. Of course, share price has rallied hard into this result, so it's a bit of a sell-off. But I will be buying a dip for this company.
Okay, and so generally speaking, when you look across the sectors, Jun Bei, where are you seeing the most opportunity? Because we've had the big tech names reporting in the U.S. Mixed reaction to some of those. Because of that whole AI thematic, but we don't have that same sort of exposure here in Australia. So is there any sort of sector that's really a standout to you?
Yeah, absolutely. So I think if we want to play AI, it's always harder. We've got the data center and the like. One interesting one to play at the moment is IFT, which is Infratel. I think we previously spoke about it. It's almost a mini way of playing the data center. It's, it run lots of fun. One of them is the Canberra data center, and it's actually, trading at quite a steep discount. And what's coming in the next few days, I think this Thursday, potential inclusion for REITs inclusion. Remember when Goodman Group was included in the REITs index, I think it's MSCI index inclusion. So if it does, it's a huge volume required. So these are big, catalyst, price moving catalysts. So, that one potentially in the short term, that's pretty good. I do think into the next 6 months, we need to look at some of the cyclical companies being sold off. We got Fly Center being sold off because, missed the earnings somewhat. So we got a couple of other retailers perhaps a little bit soggy at the moment. So I do think with the rate cut cycle appearing, we need to start buying these businesses. One other one I thought is interesting is James Hardie. Sold off 15% heading to the next quarterly result. We know the quarterly result will be a bit weak because rate cut hasn't really taken effect yet in the US. But, this will be the last bad result you'll have from James Hardie. So in my view, there's a lot of those cyclical opportunities that we can actually look into. Just take slightly longer term view.
Yeah, exactly. And when you look at some of the data coming out of the US, if those rate cuts do take hold, some of the mortgage data even last week was looking pretty favorable. Okay, but markets are not without their risks. I mean, is there a risk that China could disappoint on the stimulus front that might make it a little tougher for some of those resource names? Like heading into 2025, where are you more cautious?
Yeah, that's right. So I think China will recover, but I wouldn't be betting on 1 or 2 announcements to get us through because we've been disappointed for so long. So with resources, I'm comfortable sitting in the larger cap names that's more diversified. Iron ore looks okay, and they all look reasonable. But into the smaller names, it's just a little bit harder to call because you do need a strong China. China will recover, but it's not the hockey stick we've been waiting for. So in terms of risk, I think some of the expensive parts of the market might be a bit harder, just simply because it's they just done so well, and then the market will rotate aggressively into the cheaper businesses, the businesses that's being impacted by high interest rate, which will now go lower. So and then the some of the company that benefited from the high interest rates, such as Computershare and others, just have to be very careful because the earning will fall quite substantially.
Yeah, and you're not adverse to investing in the smaller end of the market, Jun Bei?
Not at all. I love small cap. I think small cap is where all the opportunities will be for the next 12 months.